Jerry, you all set? Ready. All right, welcome everybody to the second quarter Fairfield Board of Finance quarterly review meeting. Everyone please rise for the Pledge of Allegiance. I'm going to go to Mr. Brown tonight to lead us in the pledge.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
All right, welcome everyone.
Got through that?
A couple of programming notes. Mr. DeWitt sends his regrets. He's actually he's got a job assignment that has him in Pennsylvania for about 4 to 5 weeks. I think it was an offer that he couldn't refuse. Yes. Mr. Kiley also sends his regrets. He's in the great state of Florida this evening, also on a business trip. Yeah. And for a future programming note, we have our February monthly meeting scheduled for not next week, but the week after, February 7th. And I will actually be in South Africa, so I will not be. I'll be on a business trip that week, and I'll be back for the budget process. But I won't be at that conference call, right, at 3 in the morning for that meeting. So with that, I'll just go through quickly what we're going to review tonight. We've got the quarterly financial report for the Board of Education, the quarterly financial report for the town. We're going to hear briefly from the Budget Subcommittee and adopt the proposed calendar. Actually, we've already adopted the calendar. This is just to actually tell us what the Budget Subcommittee's come up with for the lineup of departmental and agency presentations. And then lastly, we're going to hear from Mr. Brown on the approval process for the non-recurring capital projects. You'll recall there's a subcommittee put together made up of members of both our board, the RTM, the Board of Selectmen, and the Board of Education to review our entire non-recurring capital process. And that subcommittee is met either once or twice. Once, and Mr. Brown's going to give us a brief update on where they are, how that may or may not impact this year's budget process. And lastly, hopefully to be done firstly, we're going to hear the current status of the town's pension plans as of December 31st. So with that in mind, I'm going to ask that we take item number 5 first, out of deference to our guest, Mr. Vahey, who's got an issue with a later commitment. So come on up, Brian. Thank you for being here tonight to represent the pension board.
Thank you.
Does everyone have the year-end from Callan Associates in your packet?
Mr. Hiller?
There's extra copies up on the table.
Okay.
Yeah, but I think there was a copy, I'm trying to look, it was in our package as well.
Is that the electronic package?
Yes. Yes, by the way, thank you for that. I hope no one had a problem with that this time, but going paperless is a very good thing. So thank you for that. Go ahead.
I just, the majority of the information is on the first page for the asset allocation and returns. And it shows to the left, you see December 31st numbers, 284 odd million in the fund. Our returns for the period are on the next page. Actually, it's best if you go to page 3. At the bottom, it shows that for the month, slightly down. For the quarter, which I believe this is a quarterly meeting we have here, it's actually a good quarter for the fund, 6% versus the fund benchmark, which is essentially our selections of asset allocation, but to a proxy. And it also has a the year-to-date number of, we were essentially flat, what the market was as well, if you remember. And over a 3-year period, We trailed our fund benchmark by 8 basis points with a 10.37% return. I will say what's currently going on is we're still in the process of picking some alternative asset class managers. We, at the most recent meeting, which just took place last week, we saw several commercial real estate asset managers, and we did not make a selection, but we will at the next meeting. We also selected a commodities manager, and that money has not been allocated yet, but I mean, we selected the manager. We still have another hedge fund and private equity to select. So I would say the overweights you see on the target allocations are primarily money that is waiting to be allocated to those picks once we get it done.
Do we have any questions or comments on the report? Mr. Brown?
Thank you. And I'm not sure if you have this, but last time we received this report was, or at least the last one I have, before this one is June 30th of last year. And on the last page, it gave the returns for the last 5 years. I'm wondering if we have that as well.
Was that a calendar report, or was that from our old?
It's a calendar report. They did not generate that. We could probably get that figure, which is important, obviously. There will be, one thing that I should point out there, as this board is aware, and you may want to put this down as a date on your calendars, if available. The board had commissioned an experience study report, which our actuaries, Hooker and Holcomb, have just completed a draft copy of. The pension board is going to be meeting on February 8th, the evening of February 8th at Town Hall, to hear from the actuary on that report. That report will be distributed to the pension boards. The first selectman and I and Mrs. Merrilees and the first selectman's chief of staff, Mr. Bremer, had a lengthy conference call yesterday with the actuary, just walking us through the report, which is, I think, a 37-page report. And I can say there are some, significant changes in the wind as far as the whole status is concerned. And in the email that I sent to the pension boards last week, said, it has budgetary implications, and that's why we've asked for a special meeting of the pension board prior to this board and the Board of Selectmen beginning their budget deliberations. They actually have in that report, I believe, and I don't have it with me, there are 10-year numbers breaking it out by year within that report.
Great. We look forward to seeing that report after the pension board has reviewed it and said it's ready for further distribution. So thank you. With that in mind, one of the things is, Mr. O'Hara, I do think we need to strive to get consistent reports on a quarterly basis so that we kind of get used to the format of the reports we were looking at. Because I do recall last quarter, and Mr. Brachfeld helped me out because I know you were specific on this. I think we were concerned over some of the weightings, correct? Some of the investments were over the... Yeah. So where are we?
We had Callan put in the targets to make it a little easier for everyone to actually know what they're supposed to be.
Okay, so right now, in domestic equities, we're weighted at 38% of the investment, and the target's 25.
Correct.
Okay, and international, we're at 14, and the target's 20. Okay,
Domestic fixed, 38 versus a 30. And those are all, they're not hard targets, they're essentially sort of they're actually a range, but that's kind of the middle of that range. And but I was just saying those, essentially that overweight is going to be sliding down to the alternatives.
okay, in both those areas.
The intent right now, as Brian has pointed out, we will be putting $8.5 million into commodities, probably within before February 15th.
Okay, so this overweighting
And
of,
there's another $9 million allocator. The board hasn't voted on this, but the intent is to, as he indicated, we reviewed 3 real estate funds a week ago, and at the regular meeting scheduled for the 21st of February, we'll likely be making a selection of one of those 3 finalists at that time, with the intent of moving $9 million into that real estate investment. And what that's going to do is that's going to, particularly where the overweights are in fixed income and in domestic equity, is going to shave those more towards the target.
so that the hope is that by the time we receive the quarterly report for March 31st, sometime in April or so, that we're going to be more within the target guidelines that are around there.
And the other intent is, Callan will be presenting at the February 21st meeting a private equity search that they're doing. We received responses, we received 11 responses that I've received on a search they've done on private equity. I've got 2 more conference calls scheduled with them. They'll be going to be presenting, they're going to take that down to probably 5 that they're going to present at the March 21st meeting, with the intent to bring those people in, on the February 21st, bring those people in on March 27th for a meeting, and ideally make a selection at that time on that piece.
What's going on with the Pequot funds? There's still some monies
Wyatt,
there.
there's some residue left in there. There's monies that are left with Wilmington Trust. As you see, the assets are roughly $650,000 that remain in that fund. We haven't had any significant communication from them in the past 60 days. I think their target is to totally liquidate the funds by June 30th, but they've had other targets that they've missed on those liquidations.
So what steps should we be taking, or should we be taking any steps?
sorry?
What steps should we be taking? What can we do? I assume you want to get the funds out of there, right?
I have been, our custodian has been, and Callan has been in contact with the custodian at Wilmington Trust, and all they're saying is we're in the process of liquidation. I don't know that there's anything.
But
At
how long
this
can
point-
how long can they hold the funds?
There's no limit. I mean, I don't know if we have the most recent annual report, but I know one of them's essentially a mortgage portfolio runoff, which I think is the smaller one, and the other one's an investment in a private firm that they're attempting to market and sell. So that's the bulk of the monies. So once that's done, we should be paid out. And I don't know that, I think the only way to hasten it would be to take legal action, and I don't really think that would be
Okay.
in anyone's benefit, and I'm usually not a fan of forcing a sale of something that, they're trying to maximize the value of the thing.
Is that-
they're selling, so.
Yeah, the reason for my question, I wasn't sure, given their predicament, what was going on with those funds, whether we were getting any return on that investment, or,
We
'Cause-
are actually,
yeah, because there's
they're
no
not paying
number change
fees,
here.
and
Yeah.
based on how they end up disposing of those assets, based on, like I said, where they are marked in the current books, potentially, it's a pro rata distribution of the partnership, so.
Yeah, I was just noticing that there was no change in value from November to December, so I didn't know whether that,
On all the alternatives, you're going to see primarily a quarter lag in those numbers, and
Yep.
you're not necessarily going to see a monthly
right?
change in those.
Yep.
Because of the nature of the reporting.
Okay, thank you for that. Any other questions, comments? Mr. Bolito?
Thank you, Mr. Chairman. Mr. Vahey, in your experience, if I'm counting correctly, I see that the target for alternate investments is about 12%. Am I reading that right? When you put together hedge funds, private equity, real estate transition.
Well, it depends. Different people have different definitions, but I would say that the alternative allocation can be up to 25%. Right here, it reflects 20 because really, transition was a title that's just in there, and it's actually the transition of the Pequot investment out, and so it's getting reallocated, and commodities is not listed there, and I would put commodities in there. It's not a, it's sort of like a diversification, sort of alternative type investment, so that would go in there, and that's a 3% allocation. So I would, you could title the other as commodities, which it will probably be labeled as such as soon as we make the investment. So
Now, you mentioned the Pequots, some of the Pequot residuals in that transition account. Is that different from what's listed in hedge funds above?
it's cash. That's why it's not.
Okay.
We're not returning. We're not getting it. It's going to be. That's part of the allocation of the monies, right? The investment monies. So when we make these new investments to the real estate fund, that you'll see that
You'll
money
use
sort
some
of
of the
disappear.
cash.
Okay.
But I think you had a question. You
Yeah,
really
it's
just asked for a
basically
total?
just trying to get a handle on what you feel, in your experience personally, is an appropriate target. I think you alluded to it, an appropriate target percentage for alternative investments, because obviously, given some of the experience we've had recently, it might cause one to reevaluate our position there. And, I mean, to my layman's eye, it still seems a little high, but I could be wrong. So I defer to your expertise on that. And what do you think the number ought to be?
There's no, you're not going to find a book that's going to give you a hard and fast answer. And really, if you don't have the ability to monitor and make the investments, you really shouldn't be in them. We have, there are several people on the board that have that experience. And we had a big discussion on making the allocation, and it's primarily, the discussion is centered around what type of alternative investments you want to make and what sort of clarity you have on those. And I think if you wanted to have some lessons learned from previous experience, I don't know that the transparency was necessarily there,
Yeah.
which makes it very hard to be a fiduciary and monitor it. So, I mean, we primarily go with funds that have been vetted, not only from our own experience in checking out all the different risk factors, but also for the ability to have reasonable liquidity and get our money back, and also being able to tell sort of what sort of things the fund is engaged in and has a strict mandate. It's not just handing the money to a random fund where we can't get our money back for 2 years and we're not quite sure what they're doing with it. So that's what I would say to that. And then on a broader scale, from an allocation standpoint, this pension fund, we're bringing more money in than we're dispersing. Mm-hmm. So we don't really have a lot of liquidity needs. There's no sort of run on the bank, if you will. And so if you have any kind of a portfolio as a manager that's sort of in that space, you have the ability that some other people don't to sit on an investment for a longer period of time. So the term I use for that, the professional term, is I'm a seller of liquidity. Mm-hmm. And there can be benefits. Endowments, college funds, Yale, Harvard, some of those folks be good examples where they use that to their advantage as well, invest in farmland and stuff like that, because that's an illiquid thing, but they can get returns that other people cannot. So we're not going to be doing farmland, but alternatives are less liquid, and we should take advantage of that if it gives us extra return and diversification.
Right.
So.
Now, specifically as to hedge funds, the fact that, to my knowledge, they're not federally regulated the way other types of investments are, and the fact that there is that transparency issue that certainly showed itself with Madoff, does the volatility and lack of transparency concern you as a member of the pension board, or are these particular funds that we're invested in now have a level of transparency that perhaps others don't? Understand?
Correct. There's a realm, and we choose to do ones that register with the SEC, which they are not all required to do that.
Right.
Although that may change with the new Dodd-Frank provisions, but currently they don't all have to, and also who it's audited by and what kind of financial statements and sort of what transparency you see to their strategy and holdings. Some choose to give you very little, and those would not be viable for us, and
right.
Others, especially a lot of these, like the Wellington Fund, it's primarily an equity fund. It's basically long, short names that everybody would recognize. And we're not going to get what they're in at that moment, but we can see with like a 90-day lag of what they've been doing. So I'm not going to say any hedge fund is vanilla, but these are, they're not out there on the spectrum.
They're fairly mainstream.
Yeah. Private equity will be the same thing, and private equity has a large there are all sorts of different funds. I think everybody's very familiar with, the Bains of the worlds now that we've been reading about them, but, there's LBO funds, there's also sort of venture capital type funds. Once again, in that sector, we're probably going to go with a fund of private equity funds. It gives us a blend because we don't have a big allocation, and also so we get sort of that extra oversight and get the diversification within the private equity class. So I think we're doing everything in a sound fiduciary manner.
Thank you.
Can I
Other
just add to what
questions?
Brian has just said on that? I think the board adopted, under our previous consultant, Evaluation Associates, target allocations. Callan has tweaked those a little bit, and the board adopted alternative targets of 23%, and obviously we're significantly below that at this time, with the intent that, as we just mentioned, with the private equity, commodity, and real estate piece, that will step that up significantly over the next 90 days, probably. I think the board is very sensitive and has a high level of expertise in some of these areas, with people like Brian on there. And on the hedge fund thing, for example, Kenneth, who is one fund that's an individual fund, they were with, when I look at what I used to get from Pequot and what I get from Kenneth, it's a world apart. I get weekly reports that basically, they're not telling you exactly where they are, or they're not telling you what they've invested in or what they're short, but there's a lot of attribution that they're reporting that was never the case previously, and so there's far more transparency with there, and even when I'll call down to Greenwich, where this is headquartered, they're far more open in talking to you as far as this is concerned. So I have a fairly high level of confidence. It doesn't say that they can't make bad bets, but it's much more transparent than it used to be. And the other thing on the private equity side, the good news is I can report that our investment in Lexington Partners, which is basically what's called a secondary fund, and I don't think I reported this board before, but the biggest investment in Lexington Fund is a stake in a small company called Facebook, which is going public at some point during this calendar year, and we may pick up a little money there.
Mr. Brachfeld? Thank you, Mr. Hiller.
Thanks, Tom. A couple of questions. One for you, Ryan. For Paul, this will go in the category of picayune, but principled. Pequot, are they charging us a fee
No.
for
No,
the modest amount of
Not
money that's
currently.
left behind?
Other than whatever fee is being charged by Wilmington Trust, obviously, is the
Right.
custodian of the fund, but they are not,
Okay.
that ceased about 6 months ago.
Yeah, okay. And for Brian, the thing that actually concerns me the most on this sheet, right, and you guys are doing a great job, I appreciate it, is and I brought it up at our last meeting, is the concentration in the fixed income area. I don't know if you want to address that and whether you guys have any, or maybe you disagree with me, but, you have 21% of the fund, if I'm reading it right, in Sykes, and 17.2% in Dwight. And we had, some problems with those funds during the
Well,
market
they're-
meltdown.
Both those managers are core plus managers, so they're following an index, and they're measured against the Barclays Aggregate Index, so there's nothing sexy going on there. They're actually more vanilla than one of the most popular bond funds, PIMCO, so, which has a lot of tracking error to the index. I do know that we're taking a large chunk of that money just because the natural overweight is part of that's going to fund the upcoming selection for the real estate to get the allocation down, but I don't anticipate us having a lot of extra fixed income managers, so by nature, they're going to be somewhere around at least 10% each of the fund.
Right.
And I'm fine with those. I mean, they're well established, good parentage, and it's fixed income. It's not sexy, but it shouldn't be something we regret
Again, to
either.
Paul, I'm sorry, you finished?
Yep.
Brian's describing these guys as plain Jane vanilla. Dwight, Sykes, I can understand that. Again, I'm off the pension board for a few 2 years now. Dwight was anything but back when.
Yeah.
Have they completely changed their
They were slightly overweight mortgages back in the day, but, I mean, that's not an option anymore. I mean, if that's what you were speaking to, but that's the only difference with
More than
Dwight.
slightly, back when we,
They were 40%, and the ag was 33, so yes, 7%, but I mean, I could, whatever. But I mean, that, to me, that's a bet in that sector, but once again, PIMCO being zero treasuries would be an example of what I would say of a manager that's wheeling and dealing out there.
Okay, so you know what, not to press it, you're aware of it, you guys have discussed it, and whatever it is you're doing, you're comfortable with. It's not,
Yeah,
you're
and
not
if-
just sort of accidental.
No, and if they
Okay,
underperform on a consistent basis, they'll actually get the money yanked, which
right, okay.
I think we're reviewing all of them to put them sort of on alert, because neither of these fixed income managers are,
Yeah, I think I
Killing
can
it.
say this, and I have had conversations with Callan. Dwight just last week had a major change in management at the advisory level, which raises some, as you can see, both managers exceeded the benchmark over the past year, which is the good news. I think the bad news in both cases, Dwight and even Evaluation Associates prior has some concerns about the corporate structure in both cases and the management in both cases. There have been management changes, which is never a great sign. Sykes is owned by SunTrust Bank out of Atlanta, though they're headquartered in northern New Jersey. Dwight is owned by Old Mutual Insurance Company, based in Burlington.
I appreciate it. I mean, this is a case where actually I need less than more, in the sense that I just want to make sure that you guys are you're cognizant of it and you're dealing with it in whatever way you think is best. That's fine. Third question, just, I think my feelings about the hedge funds, I've expressed them before, both privately and at the board here, so I don't want to press it, and I know that there's supposed to be some, we're looking for now, but where they don't track, so to speak, or they track opposite. But if you look at our returns in quote-unquote hedge funds versus what you've chosen to be the index, the S&P 500, which you may or may not agree with, it's awful, right? And so I would just ask you, again, what's the value added for hedge funds? We've lagged behind on a 36-month basis by almost 14%, on a year-to-date basis by 9%. Behind that, right? It may not be the right benchmark. That might be your answer, but there is obviously a lot of extra risk. There is obviously a lot of extra work involved in picking these guys and then trying to oversee them, and to get this kind of return. I'm just not sure what the value added is.
I
And
would.
this is also a short period, I know.
Exactly. We monitor them over a longer period of time. I don't know that you want the level of detail, but these are all equity-type hedge funds. They have very specific strategies that, as you know, it's been a very correlated market last year. Everything went up and went down, depending on whether risk was on or risk was off. So these strategies, these guys aren't ARBs, and they aren't momentum guys. So they're going to get whipsawed, stuff like this. These guys are picking stocks that are long and short. That's not going to outperform at all in the markets that we had the past year, and there's nothing they can do about it. Hopefully we get to a more normal market where actually a manager adds value, and I would expect these guys to do very well.
Okay. And then the last question I have is a global question, which is that, again, and Jim brought up a good point. We're only seeing three years here, which in the world of investing is a very brief snapshot, admittedly. But for better or for worse, and I would say it's for better actually, we're very much tracking the overall index of the benchmark fund, a little bit above, a little below, depending on what period you pick. But in the world of statistics, I'd say we're tracking it. And in the process of tracking it, we're paying literally millions of dollars of fees to various managers, literally millions. And I've been a big advocate for using index funds and ETFs where possible, because the evidence is overwhelming that managers, particularly just generic equity fund managers, can't beat the market over time. They never, 90% of them don't. That's just a fact. So I'm just curious if you guys have an opinion on, or if you have an opinion on why we'd want to deal with the aggravation of managing and picking managers, paying them millions of dollars and getting a result that tracks the index in the first place.
Well, I would say our index is a custom index. So, to your point, if you want to make a comparison, I guess you could pick the S&P 500. It's at 14%, and look at our return. It's 10.37. Or maybe you want to take some sort of a blend of that, and it's not even on here, but the where's the fixed income on here? Just noticing, it's on the other page.
Yeah.
So, I mean, you can take some blend of the Barclays aggregate and say, well, there's your two things, and is it really paying off? The path that we've chosen to take is that we believe there's value. Well, for diversification, we can't just buy an index for some of the things you want to do. So we're not going to get away from a commercial real estate index, and we definitely don't want to do a commodities index, because you actually will be disadvantaged. So for a lot of this fund, the only part that I would think would apply to your theory would be like the equity and fixed income. And it's not to say that maybe we don't go that way if we see underperformance by the managers and on a consistent basis, and we either have the choice at that point of picking another manager or exploring an ETF strategy, and I guess we'll discuss that when that point comes.
Okay, I appreciate it.
All right. Any other questions? Great. I had one last one. I know that we had an investment manager or an advisor, and they had gone through some upheavals in terms of their ownership. And our book of business got flipped over to Callan at the midpoint of last year, right? I know that Callan was in the running, as I recall, when you were originally looking for new investment advisors.
Before my time.
Before your time, Brian? Okay. The only question I have is, are you guys comfortable, and are you staying with Callan?
Well, their contract comes up, right?
Contract, I have received
spring,
a draft contract, which
Yeah.
I've given to the Assistant Town Attorney to review. Their contract expires, which is, they basically took over the evaluation
Right.
contract. Their contract expires March 31st. Our intent at this time is to place it before the board on February 21st, at least for review, once the town attorney, I sent it to the town attorney on Monday.
But it's not the intent to go back through an RFP process or anything right now?
Don't think so at this time. I personally am very impressed with the level of service that Callan has brought. The other thing I should add, too, is that the board is now meeting on a monthly basis, on a regularly scheduled monthly basis. The third Tuesday evening of the month, in most cases, we have a conflict with this board in March, and be changing that date by a week. But it's a very proactive board at this time.
Great. Mr. Vahey, did you have any?
I would just say that I have no problem with either of the advisors, and if you have a good board, they assist, but and they do some of the technical stuff, like run an allocation model, but that's sort of an off-the-shelf sort of thing, and I think they can all do it in a functional way. So it comes down to our ability to interact with them and their responsiveness, and I would say both of them have been great. I don't know what the rest of the board thinks, but that's just my own personal piece.
Thank you for that. Appreciate it. I wish you well with your negotiations, and I thank you for coming before us. Before I say good night and allow you to get back to your other commitment, is there any comments from the public? Not questions, but are there any comment from the public on this item? Seeing none, thank you so much, and we'll see you next quarter.
Thanks.
All right. All right. Item number one on our agenda for this evening is to review the quarterly financial report from the Board of Education. I actually ran into Dr. Title. They've been having a series of late-night meetings, as you can imagine, over the past several weeks as they've gone through their budget process. So he asked if they could have a hall pass from having to attend this evening, and they did send a written report, the quarterly financial report, that they do distribute, that they put together and share with us, and this is something that, under Dr. Title, has been an improvement in their process of a quarterly report to us. So you had that in your electronic package. Does anybody have any comments on that report? Anything we can follow up with the Board of Education on this at this time? All right, seeing none, if anybody has anything, we can certainly follow up on that during the budget process. So that's for your reading. If anybody has any questions that they'd like to pass forward, please email them to me. I will make sure they get distributed, sent back through the board, also to Mr. Hiller, so that we have no FOI problems. And Mr. Hiller, you can have that available for public. All right, so that's item number one. Item number two on the agenda was the review of the quarterly report, the financial and seasonality report for the town. I see Ms. Gardner's joined us. Welcome. And Mr. Hiller is here. Mr. Hiller, in our package, I did not see any written explanations of variances this time. Did I just
There
miss?
is a,
Did I just miss that?
well, there is copies here of the, what is a
I missed it on the
four-page
other.
report on seasonality.
Okay.
Maybe that didn't, I don't know if that missed the,
Was that distributed electronically? It's quite possible I missed it in the
maybe
electronic.
that missed the,
Yeah.
Did it? Yeah, I must have missed it.
Yeah, it's in it.
Okay. Maybe I just didn't pick it up. My apologies. Still trying to work out some kinks in the system. Thank you. Yeah, exactly. That was their kink. That's what they refer to as a pebcac error. Problem exists between keyboard and chair. All right. So, seeing the report, we have the revenue highlights first. Does anybody have any questions, comments, concerns on revenue? Or Mr. Hiller, Mrs. Gardner, do you want to walk us through any big issues that you have? And let's just hit the highlights, please.
yeah, I think the two major highlights where there are shortfalls, we are significantly under anticipated revenue as far as building permits are concerned. Obviously, there is some seasonality on that, and this is the low time, and we would anticipate that there might be some pickup as we approach the spring months on that. But our budget target on that's $1,450,000. Clearly, we are significantly under any pace to get towards that number at this point in time. And I would anticipate that if we get a turnaround, that we're still going to come in perhaps $250,000 under that revenue target,
Do we know of any large projects that have just gone away that are contributing to that?
that have just gone away, or
Gone away meaning they're not going to happen, they've been put on hold? I mean, is this just, how are you saying that we're going to be 250 down? What's the,
well, we know that there's both universities have some projects that are coming up this spring that we're aware of, so that's always a big help. There's a few smaller residential units that have approval, both conservation and zoning, which hopefully would move forward, before the end of the fiscal year. Obviously, the big question is the Metro Center, and I don't think we can anticipate anything, if that comes in, that's a major win.
but I don't think that was anticipated in the
No, it's
original
not.
budget.
I think
right?
maybe it was anticipated a year ago when
Yeah.
we were setting budget targets on that. There are a couple of smaller office projects that are anticipated, and obviously the ongoing small residential projects and home renovations. But as far as the major stuff, I say, you'd be looking at the two universities. I talked with one of the staff members a week ago at Black Rock Congregational Church. There's an outside shot that might start prior to the end of the fiscal year, on a slightly scaled-down basis from what they've gotten approval on. But that would be significant, because that potentially, on full build-out, is a $29 million project. But that's going to be, whether we get that before June 30th is the question.
Okay, other questions by board
I
members?
think the other side on the revenue in which we're reasonably certain, and I think with Dr. Bernanke's comments today can be more certain, that we're not going to hit target as far as interest income is concerned. Though we haven't priced everything out, have had some improvement as far as market value, as far as those are concerned, but, we estimate there will probably be 150,000, at least 150,000 under budget as far as that number is concerned. On state revenue, if you took where we are today, we'd come in 100,000 under. We feel confident that that number is going to improve for a couple of reasons. A couple of the smaller grants that we get, the motor vehicle violation grant, which is basically getting $10 off motor vehicle violations, is tracking at a rate which we may pick up another 30 to 40,000 in that area. Additionally, and we've been unable to quantify exactly what we're going to be getting, but the municipal sharing grant, which is a new grant as a result of the governor's and the General Assembly's legislative package this year, which will give us a share of the increased sales tax and the increased hotel tax. There were estimates potentially that we could get up to 400,000 on that. We have not been able to verify that at any level at this time, other than statements from OPM that you're going to get something, but we cannot quantify that.
Any questions on revenue? Mr. Belito?
I mean, am I misreading this, that we should be a little alarmed? I'm looking at current year levy and prior year levy kind of more or less cancel each other out, but then building permit revenues, 396K under budget. School grants, 82K. Payment in lieu of taxes, 197K. Conveyance tax, 10K. Golf fees, 58K. I mean, that's a lot of under budgets. I know specifically with the conveyance tax, interest on investment, those are the function of the economy, but what I'm a little concerned with, there's some of the state things, like the school building grants you expect to meet budget. The payment in lieu of taxes, though, how do we miss that? The all other revenue amounting to 412K. What happened?
Payment in lieu of taxes is basically the payment on the universities.
Right.
And I'm lumping that in the category right now, that if we were to close the books today on the state revenue, we'd be 100,000 short. That includes that 197,000.
Okay.
So net, right now, if we stopped everything today, we'd be short 100,000. What I'm saying, I'm confident right now that we are going to be over, and potentially, because of the municipal sharing grant, significantly over by at least $250,000. Positive. As far as the golf revenue is concerned, it was 58,000 under. Right now, obviously, the courses are closed. The Golf Commission has adopted a fee structure for the coming year, which was not anticipated, which will generate, because of the ID tags going up basically from $35 to $50, which should cover roughly 50,000 of that shortfall. Obviously, the major reason on the golf course shortfall is weather. We lost 2 weekends.
How much of that do you think will be improved by the drainage improvements that we've invested in over at Smith Richardson's particularly?
We would hope so. Where that's going to help primarily is on cart revenue.
Right.
What we lost is, go back, we lost the last weekend in August to a hurricane, and we lost the last weekend in October to a snowstorm. And we didn't anticipate either one of those. And I mean totally lost. And that's, in that business, once you lose it, you don't get it back.
Right. So you really think that that's attributable to the weather more so than a long-term trend of people just not playing golf as
Well,
much?
we know this, that the trend, both regionally and nationally, is down.
Sure.
We have figures that it's down in this 7 to 11% range. We're slightly below that. We're not down as much as some others. First Selectman and I met with Mr. Lombardo and Mr. Curley a week or so back and reviewed some of this thing. I think they're on top of it. they did create some incentives for play in November, and we were down, if you had looked at the end of October numbers, we were down 75,000. And so we picked up 17,000 as to where we were in October and in early November before the courses were shut some 5 weeks ago.
Okay.
And I think the commission has been proactive in trying to create incentives. They waived the out-of-town fees for the month of November just to generate income, and have taken what I consider, to be positive steps as far as generating potential additional income.
Right. On the prior year levy, which is 203K under budget, how much of that would you attribute to commercial versus residential property? Are we talking these are all houses that are in foreclosure, or are we talking about a few big commercial developers who are in trouble, or a combination thereof?
We haven't tracked as far as, and Mr. Gorzolani's office doesn't track whether it's commercial or residential, first off, and so we don't have that. I think when I look at what I'll call the top 25 list, which I've distributed to this board, which I'd be happy to do after this collection period. In other words, perhaps at the February 7th meeting, I could distribute to this board that top 25 list. The largest commercial development that is in that delinquent list is across the street
Okay.
from where we sit. And that's also, as was discussed in this room 2 nights ago, also on the blight list and has been leaned for blight. There are not, most of the other properties on that top 25 list are residential properties, and in most cases, in many cases, in some very high-end neighborhoods.
Right. Okay. That's all for now. Thank you.
Any other questions on this? I had one, Mr. Hiller, as Mr. Bolito tried to step through, when you read this on a line-by-line basis, there appears to be a lot of under budget. Some of it's timing, some of it is explainable by some of the things you talked about related to what you're going to get from the state and what wasn't budgeted. But I want to ask you, as the CFO, where do you think we're going to come in revenue for the year versus the budget? And what are you planning for?
Right now, and I'd refer to the end statement on page 4 of this document, which is loaded with a lot of caveats, I suppose. As far as and I think the big caveat, or a couple of the big caveats, are collections going to remain on track as they have been over the last 10 years, frankly, as far as tax collection is concerned. We feel confident, very confident right now, that barring major catastrophe, weather-wise or something like that, that we will be able to end the year on a surplus. A lot of that is tied to the fact that we have in excess of $1 million savings in our debt service account, which we've discussed with this board as a result of the funding done last month, closed earlier this month, which generates in excess of $1 million in savings.
Is that going to cover overages and expenditures, or is it going to cover shortfalls in revenue?
I think a combination of both. I think we anticipate a modest shortfall in
Revenue?
revenue, but by the same token, also some under expenditures, that we're going to pick up money there.
That doesn't make sense, actually.
Well, that the expenditures are going to be under what has been budgeted.
No, I understood what you said. What I'm trying to figure out is, if you're under budget in revenue, but
Yes.
you're also under budget in expenditures, and you're getting $1 million pickup in
I'm
debt
picking up the
service.
$1 million on the expenditure side.
Okay, so you're not saying on operating expenditures you're going to be under budget. You're saying once you take into consideration operating expenditures plus debt service expenditures, you're going to be under budget. So you're counting the debt service savings
Into that.
into that.
Into that expenditure.
Thank you
side,
for the
right.
clarification. Okay.
If you want to touch on the expenditures, I think
Let me make sure everybody's comfortable with revenue first before we go there. But we will want to go there, but does anybody have any other questions, comments?
Yeah, the only,
Please.
if you don't mind. The only
No, I
comment-
don't at all.
The only comment I make is that I think that it's a little bit unfair and not appropriate to mix and match. I think it's absolutely fabulous, the work that you did, you and your team, Paul, in reissuing the debt and getting us savings that will happen this year and years going forward. The first selectman and the whole team deserve a lot of credit. But that has absolutely nothing to do with the shortfalls or whatever that we're discussing here on revenues and expenditures. They're just totally different. And if we have in other words, what we're trying to do here is every year do a better job on our budgeting so that we, you're never perfect, right? You're
Right, the $1
always
million
good.
felt was fortuitous, right?
Yeah,
given-
it's wonderful,
right,
but I mean,
yeah.
if we bought lottery tickets as a town for some reason and we won, that would be great, but it wouldn't have any bearing on how well we did or didn't do our job budgeting. So I would suggest that we, we keep them separate.
do.
And be happy we're getting this windfall, but try to focus on what it is we may be able to do better in our budgeting process so that we can continue to reach the holy grail of matching up with our projections.
And in fairness, we want that, it'd be nice to be able to take that savings and put it towards our
Exactly.
long-term
Right.
liabilities and our fund
Exactly.
balance.
Exactly.
So,
Not to let the cat out of the bag, to use the cliche, but
but I think you're about to.
I think
At
in
least
in
let
the
'em peer
efforts
through.
that, particularly Mr. Tetro and Mrs. Gardner and myself and all the department heads have been making in preparing this year's budget, which will be, obviously, will be coming out within the next couple of weeks, I think you will see that. I think that, that there is a more extensive effort at doing that, and that there's a more extensive, on both sides of the ledger, both on the revenue side and in the expenditure side, backup for, where'd this number come from? How do we generate this number? Obviously, there's a lot of if this and if that out there, and there's a lot of uncertainties, particularly with economic things, on something like Mr. Bolito points out on conveyance tax. But I think that you're going to see a much more defined numbers, let's put it that way.
Great. All set. Can we go over to the expenditure side of the ledger? If you could breeze through and give us the highlights here, Paul.
Highlights or lowlights?
Yeah, well,
I think,
right.
a couple of the areas that are of concern,
well, the highlight is we're, on the expenditure side, year-to-date, we're $938,000 over budget as compared to where we,
correct.
prior year.
One of the
As a percentage
issues
basis.
there also is the fact that we have not taken into account the FEMA money
Right.
from the hurricane, which will primarily affect the public works accounts,
How much is that, just so that we're aware?
$450,000.
Okay, so almost close to
At
half.
$450,000, and actually, we're going to get a little bit of money, probably when you add both storms together, because we are eligible on the snowstorm, though that number is probably more in the $40,000 range. So I would say in the $500,000 range between the two storms.
Okay.
We, have gotten all the paperwork is obviously in place as far as the hurricane is concerned, and
What's,
should be soon on the.
what's driving the legal services? Does that have to do
There
with
is a
the?
separate sheet in here that spells out the legal service account by attorneys, and this was,
Yeah.
this is an estimate right
Yep.
now. Legal services, as you're aware, legal services was budgeted on the fees and professional fees at $537,000. There's been a transition in the town attorney's office. We have, there have been significant fees that have accrued over the result of labor negotiations and also the investigations that were done relating to the Metro Center station. Additionally to that, town has retained specialized counsel for the tax appeals. We have, that work has really just started within the last 30 days as far as that firm is concerned. If you see on that, we estimate that's a firm of Cohen and Wolf, who will be primarily handling that. We have 158 tax appeals that are pending on the 2010 list. Cohen and Wolf is handling that for us, and we anticipate roughly $100,000 in expenses in defending those actions. The rest of it, when you look at the spreadsheet, pretty much speaks for itself as to who got paid when over the last 6 months.
Okay.
And
So heart and hypertension then, Mr. Hill, unless there's any other questions on legal fees, I'm sorry. I was a little surprised on heart and hypertension because, and correct me if I'm wrong, but I thought we knew about these two permanency awards that are referenced here when we did the budget, and I thought we increased the budget to cover these two permanency awards.
part of this is, we had, as is stated in the document on page 2, we had two awards that were given in the month of July, two permanency awards. And those two awards plus a hospitalization. But the permanency awards were total $136,000.
But going back to my comment, I thought we knew about those awards when we did the budget last year
Well, we-
and included them in the budget figure for
Not
last
to the
year.
level, we budgeted what was estimated by our consultant. And I think the difficulty is, I think what we're seeing, I'd like to say that we don't anticipate any other permanency awards. I don't know.
Well, that's not what I'm asking.
I
What did
understand.
what did we estimate versus what did we pay out?
What
'Cause
we
we did
estimated,
increase
what we
this in-
budgeted is what was the figure that was given to us by our consultant.
So what was the difference between?
The difference can be when that comes, you know. Now, I don't know, and I have to talk to them individually if they anticipate any other permanency awards in the
I'm
next
sorry.
5 months.
We had, when we did the budget last year, and please tell me if I'm wrong, guys, but we knew of two awards that were in the process of being negotiated
Yes,
at the time we did the budget.
yes.
And I thought I recall us increasing the heart and hypertension budget in last year's budget process, specifically to cover those two awards. So those awards happen. Now, maybe we under-budgeted because the settlement was higher than what we had budgeted, but I find it hard to believe that it was this much higher than what we budgeted. So what I'm asking is related to those two awards, how much did we budget, or just give me the delta, give me the difference?
I don't have whatever they had given us as far as what they anticipated as settlements on those two cases.
Yeah, my concern here is just that, you know, much like we've done in prior years, we thought we were budgeting for something, and then we see an overage, and we say, oh, well, we didn't, you know, to your point, Mr. Brachfeld, about trying to budget smarter. Can we just have a follow-up and say, hey, you know, what was in the budget, and where do we go over on this one, related to those?
I'll get greater detail on that.
No, that'd be great, I'd appreciate that.
And I think particularly as we go into deliberations on the coming year's budget on that line too, that's going to be important as to,
That's-
do they anticipate,
That's right, because the assumption was, at least I thought the assumption was, when we budgeted last year to do a couple of these permanencies, that we would see the benefit in future years of it going down, because we had two cases that were off the books. So,
one of the problems with, when you say off the books, with heart and hypertension, they're never off the books. They-
No, but if they get,
Unless you negotiate
Unless you
a full
negotiate
settlement.
permanency awards,
Because I
right?
know the two settlements that were paid are both still active officers.
okay. I'm lost, but I'm sure you'll get me there.
Well, they're,
Because when I heard permanency awards, I thought that there were two cases that were essentially settled, done, gone away. And that's why we budgeted the way we did. And then going forward, we would have,
let me
Lost.
get further details on the specifics.
yeah, and I know that we're going into personnel matters, and I know there's a,
Yeah, I don't want to, I know
Exactly.
the specifics on the two individuals and
yeah, it's not
some
for
of the
public,
ongoing.
right. No, I understand.
We budget 85,000 more now.
Yeah, right. So there, we did put an allowance in thinking there was going to two final awards, over and done.
The thought is, though, we may have taken the hit for these permanency awards earlier in the year. We can't predict the seasonality.
Right.
And perhaps that's not a trend of,
And that's quite possible, and if that's the case, that's great. It's not evident by the write-up here, and I'm not sure what I should expect now for heart and hypertension for the 2013 budget based on this. And that's what I'm interested in seeing and understanding. Them. Is there any other, Mr. Brown?
Another point.
Sure. Does anybody finish with this one? Okay, Mr. Brown?
On the last bullet, where all other expenditures were $220,000 over budget, we're saying it's because the entire expenditure for asphalt has been utilized, correct? Am I reading that right? So is paving complete for the year?
not complete, but at least encumbered and.
Come on down. She was trying to avoid this.
Yes, the paving actually has been spent earlier in the year than we have done traditionally. And so therefore, seasonally wise, it appears as if we took the hit earlier in the year rather than later. And we were comparing this to last year's numbers because that's the only history I have.
So this number will wash itself out?
Absolutely.
Okay,
It's just an expense that happened earlier rather than later.
Okay, thank you.
Sure, Mr. Bolito?
Thank you. Fire payroll and overtime is 8,000 under budget. What are they doing different? Because that's been a problem area for us in the past.
haven't been as sick.
Is it really just related to that, just the luck of the draw?
The primary line where there's been significant improvement is on the sick. If you go to the seasonality report where the numbers are, two-thirds of the way down the page, you'll see, for
Oh,
example.
which page? I'm sorry.
The seasonality report,
Oh, okay.
okay, on page one of that, where it gets to fire, and if you go down, they've used 33% of their sick relief benefits, whereas last year at this time, they had used 50%. And so there is a significant reduction in sick leave. And I think to the credit of the department's management, I mean, they've attempted to monitor that more closely, and it seems to be paying some dividends.
It's especially surprising given a lot of the events we've had this year between Irene and, some of the big accidents on 95, that there's a credit to them. Police payroll, on the other hand, is over budget by 180. What's driving that?
Because they're closer to a full force at this point in time.
Oh, yes, this is going from 4 vacancies to 2.
Yeah.
Okay. So that's just salary and startup costs with the new officers driving some of that?
Right.
Do we not anticipate that when we originally
Problem
budgeted?
is where they are in the training cycle, too.
Okay.
As far as getting that, that should start to, I'm looking at, get the,
And did they complete their training sooner than we thought they would, given that
No,
this is a seasonal
no.
report? No. So we did anticipate when they were going to finish.
There's still, you know, if you look at the Munis report on that, though, there's still 212 in vacancy money remaining in that account.
Sorry, what page is that, Paul, on the Munis
Page
report?
16 of the Munis
16,
report.
Thank you. Okay. And which line are you on?
Police regular payroll.
Okay, so that's 97.3% used, encumbered, right?
Correct. Through December 31st.
And that's factoring in the 2 additional officers.
Correct.
Now, is that something that we anticipate as a one-time? Because I know that often with the training, there is additional expenditures that go along with that, and once they're on the, you know, they're the full-time officers, does that level off?
It does level off, and then they're out of the academy now.
Okay.
I don't believe they have anyone in the academy currently.
I think it said they have gone from 4 to 2 with 2 officers completing their training in December, so, yeah, okay. And the public works budget, that's over 310, but you're attributing a good amount of that to Irene, I'm
There's two things
guessing.
there. Obviously, that's where the bulk of the expenditures are as far as the storm is concerned. And it's also where the bulk of the expenditures are on the fuel tank problem at Fire Station 1. Potentially, we may be, you know, I'm not certain exactly the timing, but I think we're going to be seeing a request on that for longer-term financing on that shortly, because we've got a pretty good handle now on what the total exposure was. But all of those expenses, and we had come to this board back, when we became aware of that back in October or November, and said, this is where we're going to spend the money right now, and so we're going to create some problems within this account. And so you got 2 major events which are driving
Right.
that problem.
Now, the damage that was done to Penfield, looking forward, is that something that we're seeing is going to be reimbursed by FEMA or partially reimbursed by FEMA?
Portion, small portion.
Small portion. Do we anticipate that this number is going to be even more out of skew because of the work that needs to be done at Penfield?
There's, well, the big question is what I'll term the long-term fix of the berm that's around there. Right
Right.
now, if you've been down there, there's a bunch of what I essentially call Jersey barriers that have been put in place so that if a major storm came in, we wouldn't get the type of tidal action that we got during the August storm, rather. And there is going to be a request for some permanency to that.
Did we ever determine what portion of that work was done by DPW and which was done by the independent contractor? I'm just thinking in terms of recovering money for the damage that was done, if it was done improperly.
I don't believe so. I don't know if the first selectman's,
I know there was some, when we talked about this when it first happened, there was some issue in terms of the way that that deck was put together, underneath particularly, that there was just basically lattice work put up as opposed to proper barrier or berm, I guess you call it, and that there was also some question about how the slab was poured, and there was some debate about whether that was done by Secondino or whoever the independent contractor was, versus the work at DPW. I was just curious if, again, just looking to see what we can recover to fix that place.
Don't recall the comment on the slab, but we can take a look at that.
Didn't they have to
in
put a
terms of
balloon under there or something in order to get it level?
That didn't have to do with the slab, that had to do with the support pieces.
Okay.
They were able to
They've
do
been
that
wiring it wrong.
and get that, the pilings, if you will, that
Okay.
were put under there to support the building. In terms of the lattice work, at the time, that was thought to be reasonable.
Mm-hmm.
It turns out it doesn't stand up to lifeguard chairs being thrown at it by 50-mile-an-hour winds.
Yeah.
And
Silly
so
us.
that has to be taken care of. And then in looking at the flooding
Mm-hmm.
that took place, we're looking at what we have to do to the berm and everything else. What's out there now is, for lack of a better term, a big cement Band-Aid to make sure if there are any interim storms that they don't have the same impact. We're going back and looking at a much more permanent fix. Right now I'm anticipating that we'll be bringing a steep grant through to this board at your February meeting. We are looking at using that steep grant for approximately $400,000 to finish the parking lot. As part of that, there are some proposals along with that, what we'll do with the balance of the funds that were allocated or appropriated for completion of Penfield. So we have some under-budget opportunities there. We're going to present our recommendation for that. But at that meeting, the opportunity will be both to listen to what we're talking about to do with the steep grant,
Right.
but also explore what's taking place with Penfield and kind of see where those are. So we'll have Mr. White here, Mr. Gallagher here, and be happy to go through that in more detail so you can see where all that is.
Okay, so that gives us an idea where we're going forward with it. In terms of the damage that's been done, basically we're talking about a little bit of help from FEMA, but not a whole lot else. Would that be accurate to say?
I would go with Mr. Hiller's comments on that.
Okay, thank you.
Okay. All right. On the expense side, here's what I see. First of all, I would like to commend the fire department. We've been beating them up pretty good over the number of years on the overtime, so I'm happy to see they're under. I see that the police are over due to Tropical Storm Irene, due to a vacancy for an extended injury. But I see that they're claiming that they'll be back in line by the year end, which that has actually been their history there as well. So
Right.
that's not inconsistent if they've managed within their budget. Public Works is over budget, but it appears that we got a lot of that money reimbursed in the month of January, particularly related to the storms and the storm damage. The one area that I see that we're over, I just want to point this out, because it's the law of unintended consequences. In the unemployment insurance, right? Tell me if I'm reading this right. First of all, what was the total budget for the year?
200,000.
Okay, so the total budget was 200,000. I remember at the time, I don't remember whether we actually took it up a little bit, or there was a discussion of taking it up, but I know we took it up. We were concerned about this account.
125.
Right, okay, so we went from 125 to 200, knowing that with some of the other items that we were contemplating in the budget, that this line item would be hit. Now it looks like what you're indicating is that the actual expenditures in this account could be as much as $400,000. And if I read this correctly, and I'm doing cocktail napkin math here, maybe I should put that differently and say back of the envelope math. If I'm doing my back of the envelope math correct, it's saying that $300,000, give or take, is related to the Board of Education?
Approximately, yes. I have asked Mrs. Fitzgerald, we just paid out, which is not reflected here, we just paid out last week, which were claims, which was the December bill, which are basically claims that were paid for November. So that's the lag that you get on this. We paid an additional $25,000 for the Board of Education. I've asked Mrs. Fitzgerald, particularly as we go into budget deliberations with the Board of Education, as the impact as to where these personnel were employed, what division within the Board of Education. My concern, frankly, is that there's, and this is more budget talk, is that they anticipate significant layoffs.
Well, that's my concern. They do. They've projected significant layoffs, and is that now going to be covered on the town side in the budget that's put forth? And do these layoffs?
Conversations with
bleed
Dr.
over to
Title
next year?
indicate that he doesn't feel that it will. We're looking for back from an analysis as to the people that we're paying now. And obviously, we could, we're not going to release names, but we're going to release maybe what departments or what type of position they had and what our costs are in those.
I mean, we missed this one by a howitzer. Double.
A double howitzer,
Right.
yeah.
And then there's more personnel moves contemplated this next year. So
Correct.
first question I have is, and I'm not familiar enough with the unemployment laws, how much of this overage is going to bleed over into the next fiscal year?
Well, the difficulty with that is two things. As you're aware, the federal law now extends unemployment benefits for
Exactly.
99 weeks. What we're hoping to see, which we haven't seen in the last 3 months, and what we're hoping to see perhaps in the bill that we will get in the first full week of February, is that some of these people either got part-time employment during the holiday period or more permanent employment. Because it's a long list of personnel that are
Yeah,
out
but
there.
to your point, though, Mr. Hiller, though, if it's 99 weeks extended, let's not get into the details of the personnel. 200,000 in next year's budget is not going to cut it.
That number is not going to be in next year's budget.
Right. So it's going to be somewhere between 200 and,
It's going to be a higher number.
yeah, whether it's 400 or whether it's 300 or whether it's 450.
And our difficulty, and we had a meeting today on it, our difficulty is predicting this thing.
Mr. Chair, if I might,
Please.
obviously, we're in the process of putting together the budget. We're looking at these
Yeah.
numbers and looking at what adjustments we need to make, kind of at two levels. Level number one, given the 99 weeks, what do we learn about this? What's a reasonable guess for
Right.
how many of these will be going, projection for how many of these will be going forward?
I
And
think guess is probably right.
we're in the, don't tell Paul that, I've told him it's got to be a projection.
Okay.
We have specifically gone and are analyzing that to see, okay, where are we? What's a reasonable projection for next year?
Right.
At the second level, Mr. Hiller is, based on the Board of Ed report and update, has gone over to meet with the Board of Ed staff and say, okay, tell us where these layoffs are going to come from, and what do you think the incremental amount will be? At the moment, they're projecting that it won't be a significant hit on this area, and Mr. Hiller is sitting down with them, asking him to step him through that so he can also shake his head yes to that. And
Okay.
we have just started that the analysis process. We hope to have, our budget goes to print roughly somewhere around February 1st. We're going to endeavor to get as much of this analysis done by then. Some of that may tail into February, and we may be making some adjustments during the budget deliberations in March to account for late-breaking information.
Okay. Thank you. And then the last item that I noted, and I'll turn it back over to my colleagues, is that, and it's a comment and a question. First of all, some good news on the internal service fund as of right now, which obviously could change in a blink of an eye, but that's some nice news that it's under budget by a significant amount. The question I have here Paul, forgive me, I don't remember it from last evening or whether it was even addressed, is how is unemployment insurance, or not unemployment, rather, workers' comp? I always confuse those two. How is workers' comp doing this year right now versus where we thought it would be and versus prior year?
Right now, it's, I'd say this, if you'd asked me that 30 days ago, not great, because there seems to have been, we have to pay out, our situation with our administrator is they draw upon our account $100,000 at a clip and disperse claims on that basis. We don't know when they're going to do that. We get a report after the fact showing what claims were paid and if there were any settlements or stuff of that nature. And so the problem has been, in predicting this, we see all the information late, other than when they go in and take money out of our checking account. And so really what happens is, they can come in and take $100,000 out and then come back in 10 days later and take another $100,000 out, and we kind of go, oops, we had a bad month. It looked bad early, it seems to have slowed, and the claim level.
Who within the administration or who is responsible for tracking and understanding what the issues are and following up on them? I mean, I know some of this is outsourced, but who bird dogs this within the administration?
We we've had a vacancy in the Human Resources Department. The person who was bird dogging that in Human Resources retired.
Is that on
back-
workers' comp? No, I'm kidding.
I'm sorry? Not a recipient of workers' comp, but retired back in basically the 1st of October. There has been a vacancy there. An individual who I interviewed, along with several other people, has been hired, has not started yet.
Yeah, Mr. Chair, just to clarify, and certainly as we're going through the budget process, this is one of the questions come up. I've asked Mr. Hiller and Mary Carol Merrily, as our Human Resources Director, to get much more active in terms of tracking this and making sure we know what's going on, specifically at two levels. One, I'm going to say reactively tracking the numbers, and as you remember from the, well, I guess you said you didn't, but as the December 31st number showed us, we're basically breaking even so far this year.
Right.
I think it was plus or minus $25,000 from that. So we're in good shape at this point this year. This account is one that's projected to, or we've been asked to budget a significant increase next year. So we've had several meetings with PMA, who's our workers' comp consultant. We just had one 2 days ago where we stepped through what the drivers are, what's taking place, and what we can do about it on this side. I do want to point out, it's another area that the Board of Ed has been very cooperative. Two of their staff sat in on this, and we're going to make sure that we have a coordinated approach to make sure we get the right training out to our folks. And we've budgeted additional funds, as I think you heard back, I'm going to say a couple months ago, but that when the PMA rep was addressing you, that we'd be budgeting additional money. That is in the budget for training, so that...
But does our trend line continue to go up? Because we've had a couple of horrendous years. And I know some of the increase is going to be, what we want to do is try to start paring down the shortfall we're carrying forward of the 7 million. But do they also project that just the annual expense is going to go up as well? Because we've had some
Yeah.
significant,
right now, we're looking 1 year ahead.
right?
So yes, the number's going up significantly for next year. If you think...
I'm sorry, does
in-
that contemplate, and I apologize for cutting you off, but does that contemplate us helping fund the shortfall, or is that just to stay even? Do you know what I'm saying?
Yeah, I'm looking at it as two different
Okay.
approaches, if you will. One is what I'll call the financial approach, which is, okay, we've got a $7 million liability that's not funded. What steps are we taking to lower that liability?
Right.
Besides hoping for good experience and overfunding
Right.
in the short term. The other piece is that we are making sure that we fully fund that. Now, that's the risk management line. So workers' comp is a big piece of that, but so is general liability. So if there's a slip and fall, if there's a student in gym class that gets hurt, that gets into that general liability piece, and that is part of what drives it. And when you look at, I don't know if you held on to the 10-year handout, we will provide that when we go through this topic at the Board of Finance, Board of Selectmen sessions, but that 10-year, you can see the general liability occasionally spikes along with that. So we're looking at kind of the holistic side of that and making sure we're addressing each of those components. Our budget number reflects that.
Okay. Thank you. Any other questions, comments, concerns from board members? Mr. Brachfeld?
Thanks. It's actually not directly related, but I thought it was the right moment to ask Paul. Just one quick question. One of the agencies, I think Moody's, downgraded the state, right, the other day? Moody's.
AA3.
Right. We don't
deserved it.
get anywhere near the level of state aid as a percentage of our budget as some other towns and cities in the state. But we get some, obviously. Is there any risk that there's a cascading effect on our credit rating because
We
the state-
received, you've all met Matt Spurndle, who's our financial advisor. I received an email from Matt on Monday when that action was taken by Moody's that lowered the state from AA2 to AA3. Moody's, more than the other two agencies, has been more inquisitive when things happen. You know, when the United States was downgraded, when the hurricane was coming, all these things they want to know. And he sent an email to the roughly 20 towns that he represents, saying that he had been in touch with Moody's and they don't anticipate anything, but beware that they may come at us again and say, What are you doing because of the state situation? Is there a trickle down on that? And I haven't heard anything further back.
If I might, there's definitely some mixed messages from the rating agencies. S&P downgraded the U.S. and reaffirmed us at AAA, not with a negative outlook, but AAA. Moody's, that didn't downgrade the U.S., had us on the watch list, then had us on a negative outlook with everybody else, with the other AAA towns. And when they took the other AAA towns off the negative outlook, they didn't remove ours. Some of that's not unexpected. They've had us with a negative outlook for the past 2 years. And the concern they had was the internal service fund, and that hasn't changed dramatically in that 2-year, at least not to the positive in that 2-year time period. We're finally getting some positive results in that. I think there's a good story to tell there. At the time, we asked Moody's, can you remove the negative outlook? Their comment was they're not quite ready to do that yet, but they will be looking at it again in about 6 months. Now, they said that in November. I'm assuming that means sometime this summer. When we go out for our bond money this summer, we will be bringing in at least 2 rating agencies to review us again. So we have an opportunity there. So when I talk about looking at some of the financial pieces in terms of addressing, say, our workers' comp or our risk management deficit, some of the others, to the extent that we can address those in this year's budget, allows us to look good for the bond rate and hopefully gets us a step closer to that, removing that negative outlook. The Moody's was reticent to say, hit this number and it's off. They're not giving us a hard target, if you will. And
But they're also not saying because they downgraded Connecticut that it necessarily follows that the AAA towns, which is your point, right? Right.
correct, and that's what I mean about the mixed message. They spent a long time worried about, boy, if we downgrade the U.S., could you even be a AAA? Because of all the federal contracts and
Right.
hospital and everything. We're like, but we don't have any of those. Oh, yeah, but we still have to look at it in more detail. We didn't have time to look at it in detail before we put you on the watch list. Thanks, guys. So I can't clearly tell you because we're getting mixed messages from them. I think the simple message is this. We know we have some items to shore up on our balance sheet. We know we have some items to shore up on our reserves. Moody's in particular picked on us for our reserve levels. I don't hear anybody here arguing with that, and we know we have to pick those up, and we're making efforts to do that. From a broader financial standpoint, our pension funds are in much better shape. We finished with a surplus the past 4 years running. We've done a lot of things that other towns haven't. And when you look around the state, Moody's is certainly getting much more aggressive. Paul gets questionnaires before a major event if it's predicted. He gets questionnaires after a major event to see where we're doing. We had, in fact, we had a conference call with Moody's, Paul, didn't we, after the snowstorm, just to see what happened here. When you look at what's happening in other towns, I think they've got some other crises. Certainly when you look at the winter storm to the mid-state, the Hartford area AAAs and other towns, they've got some significant issues there because of the impact of that weather event. We really dodged a bullet. Come Monday at 5 o'clock, we were in pretty good shape from that storm, and when you listen to what happened elsewhere. So I think that I'm hoping in comparison we can show that we've got a solid track record, and every year that keeps improving. Along with that, that's why we're taking a very hard look. We're going to do everything we can to finish in the black again this year because we want to be able to sit there and say we finished with a surplus 5 years in a row in perhaps the worst economy in the last 50 years. And we think that hopefully will make us stand out compared to other towns, demonstrate that we've managed our way through this with the revenue shortfalls and with everything else that's come through.
Thank you.
On that regard, I just pulled up the email that Matt sent. He just sent, and this was to his 20 towns. Friday, Moody's downgraded the state's rating one more notch to AA3. The report has been attached. This email is just to put you on notice that there is a chance, hopefully very minimal, that this could spark another round of surveillance calls with Moody's, since based on recent history, everything else that has happened over the last year or so, hurricanes, snowstorms, possible rating average on the U.S. government, has triggered a call. If I find anything out definitive from Moody's, I will let you know. In the meantime, let's just hope the phone doesn't ring.
Thank you. All right, any other questions, comments on the financial condition or the financial report? Seeing none, we'll go to the public. Any comments from the public? Seeing none, back to the board. We'll go to item number 3. I'm going to turn it over to Mr. Bolito, the chairman of the Budget Subcommittee, to just step us through the proposed calendar. Now, you recall, we already adopted the calendar,
Right.
so I'm not sure that we actually need to vote on this. This is just to lay out what the Budget Committee has come up with for a presentation
Right.
format and a schedule. So
Yeah,
go
this
ahead.
is just for informative purposes only. We try to keep the departments together by how they are in the budget book and what we've done in past years. Only big change this year is that we are going to be getting the presentations on the short-term projects, non-recurring, whatever you want to call it, for both the town and the Board of Ed on February 16th, which is a Thursday. And we're going to be voting on those items on Tuesday, February 28th. The main thing we wanted to accomplish was to get this done before the budget process so we can give these items the attention they deserve and not have it get lost in the shuffle. I want to thank Mr. Tetro for being very flexible. He's actually going to be doing his summary budget presentation on the 16th as well. That allowed me the flexibility to fill in the rest of the schedule and get done what we needed to get done. So that's basically it. Other than that, it's pretty straightforward. It is what it is. Any questions, comments, concerns from anyone? Thanks, Mr. Brown.
The only question I have is on February 28th.
Yes.
The Board of Ed has a meeting the same day. And if we're going to be discussing their capital improvement projects, is there going to be a conflict? I'm sure they'd like to be around when we do.
Absolutely.
Actually, we'll be voting.
Yeah, we're going to be voting on it, correct. We had put out the schedule, and they, I guess, changed something. There was some miscommunication or something going on there. So we're going to have to get together with Dr. Title and figure out either we're going to move one day or they're going to move one day, and I don't anticipate it being a huge problem. I'm sure that between the two boards we can come up with a mutually acceptable solution to it. So it may be that somebody changes a day, but I don't think it's that big a deal. At this point, we said the 28th, and we're going to keep it the 28th. Okay?
Okay. The couple items on here just to follow up on. I do know Mrs. Gardner did indicate that the library had asked to make sure they could give a brief presentation on their nights. It's listed as a question and answer format. I think they have something very specific they'd want to go over, so we want to make sure we take note of that. And I think the miscellaneous, the not-for-profit organizations, it says here format TBD. I think since it's on the question and answer night, I think we're going to leave that as the question and answer format for them as well, right? The only unfortunate part is I don't think, Mr. DeWitt isn't here to speak to it, but I don't think that subcommittee that had been put together many months ago to study the whole question of how the not-for-profits get on this list have actually been able to come to a definitive
In Mr.
conclusion.
DeWitt's absence, I would say that this is unfortunately going to have to be next year's business in terms of recommendations. Yeah.
Yeah, and I think you guys had made some good headway, then hit a stall period. A lot of stuff happening. Right, now some of the players have changed because of election results, right? So unfortunately, we're probably going to have to hold on that until after this budget process, but I think we need to get that resolved. Mr. Tetra, did you want to speak to that?
Just a quick comment. To the extent that we can, looking at these agencies and realizing the tight fundraising world that we're in, I would encourage this board to consider making any adjustments, recommendations, or however we're going to resolve any joint decisions, let's say sometime before Labor Day, so that any organizations that might be impacted have plenty of lead time to look for alternative sources of funding. If we're not going to touch them, obviously that's less important, but if there's going to be an impact, we want to make sure that we
You
give
mean
them
for
plenty of time.
next year, right? Yeah.
Well, if we do it by Labor Day, then they have, 9 months or whatever time,
Yeah.
a good 6 months anyway, before they're
Right.
impacted.
And to be clear, that subcommittee that we asked to be put together, that was a variety of different public officials. It wasn't just Board of Finance. I think there was a representative from the Board of Selectmen, a couple representatives from the RTM, and a couple representatives from the Board of
But
Finance.
now that I'm not on the Board of Finance, I'm okay with blaming you guys for the delay.
Right, I was going there, exactly.
Everyone else does.
And that's what I was calling out. Any other questions, comments, concerns on the departments? The one item is that we need coffee and donuts each night, so we need to sign up for nights.
Yes, typically that is the province of the Secretary of the Board of Finance, but since he's in the Witness Protection Program for a while, I will come up with a schedule. Rookies get first shot, so, but other than that, we'll put a schedule together. Thanks.
There you go.
I think the rookies are supposed to get the food at like Whole Foods or,
Yes.
what's the other one called, Balducci's?
Yeah.
Yeah, okay.
Prep is fine. We don't say no to that.
Yeah, this is,
Aperitifs.
this is a health conscience bunch, yeah.
Since when?
Yeah, exactly. All right. Any other questions, comments, concerns? Comments from the public on this item? Seeing none, we'll go to the last item on the agenda, and I'll turn it over to Mr. Brown to hear a report on the subcommittee. It's really not the Board of Finance subcommittee. It's the Board of Finance subcommittee representative on the approval process for the non-recurring capital projects. Mr. Brown.
And one of the reasons why we put this subcommittee together was to avoid some of the issues that we had last year and during the budget season.
Right.
And the issues really came about because of the capital improvement projects, or are they non-recurring capital projects, or are they short-term projects? Probably one of the things we need to do is come up with a name
Yes.
that everybody uses. I mean, the Board of Ed uses capital improvement projects, and this is the book that we've all received. But anyway, we met January 10th. The committee members were two from the RTM, David Becker and Hal Schwartz. One member from the Board of Ed, Mr. Phil Dwyer, was in attendance. So was Dr. Title. A member from the TFC, Al Kelly, was there, and Mr. Tetro, who chaired the meeting, and I was there. And we took this meeting, and we decided, because of last year, to review the approval process of capital improvement projects for non-recurring for the Board of Ed. We did not discuss the town at this meeting. There'll be others. But coming closer to budget season, we decided to focus on the Board of Ed. And with that, we in turn focused on two items. One was the role of the TFC, and two was the timing of the votes. And as we remember last year, the TFC was basically given the charge to work with the Board of Ed on this CIP in the last minute. And at the time, they were pretty overwhelmed, and there wasn't a lot of time for the Board of Ed and the TFC to work together on this. And we had our presentations, and everything got pushed into March, right smack in the middle of our budget season. So we want to avoid that. So for this year, we talked about what can we do this year and what can we do in future years. So this year, the TFC will have no role in the presentation of the capital improvement projects or non-recurring for the Board of Ed. They will present themselves. And you receive this book. It's pretty substantial. I think they did a very good job in putting the projects together so we can read this, and they'll present this, and they'll present this on their own. And we just talked about the voting, the timing of the voting. Dave Becker and I exchanged emails. They will, if we can get through this on February 27th or 28th, what have you, the RTM will vote on this in March, and they'll have it done. And this way, these items get the attention that they deserve. In future years, I think we need to have final discussions to talk about how we'll handle this next year, the role of the TFC, if there will be one, and again, the voting of the timing of the votes. Because it's possible, and Dr. Title said, they can review and they can vote on these projects at any time. They could review them in November, vote in December, and move it on to the Board of Selectmen. You know, just hypothetically, they could look and vote in January. We could, as a Board of Finance, take a look at this in February.
Yeah.
And then move it on to the RTM, and that way it's complete, and there's a lot of time to take a look at this. So that's what we discussed on January 10th, and there has not been a date set yet for our next meeting.
Thank you. Any questions for Mr. Brown? Seeing none, we look forward to further updates. We'll keep to the schedule that's laid out for this year, and hopefully we'll have a better schedule and more advance notice next year. So thank you for your service on that committee. Last item of business, Just as a heads up, Mr. Tetra and I did attend and have a rather lengthy discussion last night with the Board of Education related to the proposed memorandum of understanding related to the Internal Service Fund. In particular, the medical costs and the medical funding of the funding of the medical insurance by both the Board of Ed and the town. It was a good discussion. I think there was a lot of good information shared. I think the Board of Education understands our concerns over the Internal Service Fund, as well as the Board of Selectmen's concerns, as well as, I dare say, the RTM's concerns. They have asked that the memorandum of understanding be shared with our board. Now, you'll recall that I've emailed during the past many months, starting last summer and ending probably last November. Mrs. Gaffney, if you haven't seen it, I'll flip it to you, because I don't think you were on the board at the time.
God bless you.
God bless you. Some of the various iterations of that memorandum of understanding. And basically, the memorandum of understanding, at least the original drafts, were set out through discussions with Mr. Hiller, Mr. Tetra, Dr. Title, I think Pam Iacona, and myself as a representative of this board. You'll recall last spring, it was asked that I do that on this board's behalf, and Dr. Title really took the charge of putting the memorandum together and running it by all of us. I've made no commitments on behalf of this board. I've spoken as a representative of myself. I think I fairly represented our concerns, which were that fund not be drawn down after the budget process below an acceptable level. That level that we had laid out was 2 times the IBNR, while giving us, as well as the other town bodies, the opportunity to do 2 things. Number 1, address and make sure that we continue, as we have over the last several years, to appropriately fund the town-side medical insurance, to continue to improve that balance on that IBNR, which, given some positive experience and given the fact that we have followed insurance representatives' advice over the past several years, has made steady improvement, as well as start to address the underbalance situation we have in the workers' comp area, where we have an underbalance dragging down the entire internal service fund of about $7 million. And we reiterated that to the Board of Education last night. We told them that that was our primary goal of the memorandum of understanding, to make sure that they don't draw their IBNR, particularly after the budget is complete. That allows us to jointly address the situation impacting the town. Some new information. We've been told for quite some time that the workers' compensation costs that the town was carrying was for both the Board of Ed side and the town side. You all remember that the town carries the weight on that, carries the water in their budget. Mr. Hiller and his team did an analysis along with our outside representatives, and in fact, last year, so the fiscal year for ending 2011, 60% of that cost was actually attributable to the Board of Ed. Now, that's about $1.2 million, $1.3 million last year. That number fluctuates. Sometimes they're 40% and the town's 60%. Sometimes it flips back and forth. But it's a substantial number, and the point we were making to the Board of Education was that we're in that together. And collectively, both the town and the Board of Ed side, we collectively own that $7 million liability related to the workers' comp. And that was the crux of our discussion last night. Mr. Tetra, did you have anything to add to that? Just briefly, I just want to make sure everybody's aware.
Yep. Again, we'll try and go through this in a bit more detail and take everybody through that when we come through the budget number, both because the workers' comp number's gone up, but also we really tried to focus the discussion. There's been a lot again, we all heard it last spring, a lot about this insurance program versus that insurance program and who's funding this and who's funding that and what their respective balance is. What we tried to do last night during the discussion is get everybody to realize it's the risk management fund that's driving this, and that's workers' comp plus general liability plus a couple other categories. And get it away from town insurance versus Board of Ed insurance, but the Moody's who gave us the negative outlook 2 years ago, specifically referenced the Internal Service Fund when they did that, is looking at the negative 4.7 for the fund. They're not looking at each individual category. So we're trying to balance that, and we were asking for the Board of Ed's cooperation in doing that. And after, I'm going to say, an extensive discussion with us, they went on pretty quickly to pass the budget. So I think that we made some headway in terms of helping them understand what we're trying to do, not impact their budget, not tell them how to budget, not run the Board of Ed, not change their guidelines, not impact the educational priorities, just keep this one number on the balance sheet that we both share from going down any further till we have a chance to address some other things.
Thank you. And I'd like to thank Mr. Dwyer. I'd like to ask you to, on our behalf, to once again thank the Board of Education for having us there last night. I appreciate the time. And I appreciate you and your colleagues working with us on this joint issue for the town. So thank you, sir, for that. Any other questions, comments, or new business? Mr. Stone, did you have something you want to say? Did you have a motion you want to make?
Motion to adjourn?
Do I have a second?
I'll second.
All right, Elaine seconds. All in favor? All opposed? We're done. Thank you, everybody. Have a good night.
Boy, that was a Polito-esque. You got us out by 9:30.